Hello again, fellow BeachBum traders. Thank you for joining us for part 1 of our weekly trading game plan for the week of April 18th through April 22nd. And in honor of the Easter holiday weekend, we want to hopefully help you resurrect your portfolio now. So hopefully your portfolio is not dead or dying, but we would like to hopefully help you be able to make money in the current market and ideally in any market conditions. So we'll go through some market analysis of the markets from last week, and then we hope you will stick around towards the end of the presentation, and we'll talk about some themes that we see in the markets and some strategies on how you can make market and resurrect your portfolio now, and again make money in any market conditions. So we hope you'll stick around to the end of part 1 for that information, and also return for part 2, where we will pick our individual stocks for our watch list that apply those strategies and themes and take advantage of that information. So let's get started. Okay, let's start off by looking at how the markets closed on Thursday, April 14th. Again, this is a shortened week because of Good Friday, so the markets are closed on Friday, April 15th. So we see the markets closed down on Thursday. Also, Thursday was an options expiration date because, again, the markets were closed on Friday, so rather than the third Friday, it was moved up to Thursday this week. And going into a long holiday weekend is not atypical to see a risk-off activity at the end of the week or the last market day before a long weekend, which is what we saw. We see this dip at the very end of the day. Those were probably market on close orders, and again, not atypical to see a risk-off behavior going into a holiday or a long weekend. We can also see we still have more companies, stocks below their 50-day moving average and below their 200-day moving average, and more decliners than advancers, and mostly red. So yeah, it was a risk-off day of people going into the holiday weekend. If we look at some of the news right now, today is Friday. Again, it's markets are closed today. We see, Russia's still an issue. We've got China issues with the pandemic, as well as some other issues. And then we've got the Twitter stuff. And then we've got bank earnings. We're starting into earnings season, and we'll talk about that a little bit. And then we'll also talk about the economic data. And then we'll talk about the run-up in, continuing run-up in energy. Gold is, we'll see that the futures and the Treasury, the increase in the yield to Treasury, which again impacts the tech stocks and NASDAQ more heavily, and may attribute to part of the decline. Okay, if we take a quick look at each of the indexes on a weekly chart in FinViz, we could see the SPY for the S&P 500 is now broken below its long-term average, so it failed to break out and is now declining further. If we look at the NASDAQ, the QQQ, again, similarly, we see this test of the averages we talked about last week. It was testing that apex of the averages, failed, broke down. So again, as we've been saying for quite some time now, we're in a declining bear market. And we'll see the same thing. The Dow was less severe, but again, it tested the apex of the moving averages, failed, and broke down. So all of those indicate further downside. So it further confirms that we're in a downtrending bearish market, and therefore we should flip our mindset. And again, if we want to resurrect our portfolios, what we need to do is take a mindset that we're in a declining market and play accordingly. We can make money in a bearish declining market just the same way. We just have to flip our mindset, flip the charts, and play it the same way we would be playing in a bull market. We can see the IWM for the Russell 2000 has been below its moving average for quite some time, but again, it tested, failed, and is in decline. So if we look at the VIX very quickly, we can see there was some volatility around the CPI data and the PPI data that we'll talk about in a few minutes. But then it did settle down some. There was actually some strange behavior on Thursday where the markets were declining and the VIX was declining. Normally when the market's in decline, the VIX increases. So that was interesting behavior that we saw. Okay, I think the railroads is interesting, and we have another video that shows you this analysis of how you can identify a hot industry and then drill down to find the individual stocks in that industry to do further analysis. So I'm going to do some further analysis on the railroads. So I brought this up. I just clicked on it. It brings it up in the stock screener in FinViz, and then you can do further analysis. So I selected a PE greater than 0. Shows profitable. We can see the railroads, a chart view, and then we can flip over to also a table view to see their metrics. I'm going to do some further analysis on the railroads because I think that's a potential positive future theme with the high oil prices. I think that railroads, we can see they've run up a bit, but I think there's an opportunity there that you'll see more rail traffic transportation as well as what they call intermodal, which is trucks bringing goods to a rail and then the long-haul transportation being via rail. So I find that interesting. So again, I'll do further analysis, see if there's any additional stocks we want to add to our database, to our watch list, to our bullpen, etc. So if we continue, we can see again the worst. We see semiconductors have finally rolled over. So as you probably know, we've had a position in SOX, which is the short on semiconductors, assuming that this eventual or the shortage would lead to an oversupply and therefore a rollover and decline in semiconductors. So we're starting to see that. We see further downside for semiconductors, and then that oversupply will probably turn into a shortage again. Semiconductors are very cyclical. So if we look at the weekly, again, we see coal, energy, basic materials, silver, gold, etc. We'll talk about this airlines lodging reopening thing and what our opinion is in those regards in our strategy section. Again, we see agricultural inputs, etc. Again, oil, silver, gold, uranium we saw pop up there, and again at the bottom we see solar, which is a little ironic, semiconductors, etc. So, and again, long-term theme, pretty much the same. So again, just like we saw in the groups, energy, basic materials, consumer defensive, and agricultural are the themes you want to keep in mind. And again, you can see that further video on how to drill down on any of these individual industries to get further information. We do a quick look at the countries to see if anything interesting pops up. We see Greece, that's probably shipping. We see some South American, that's probably again basic materials. We'll see a longer term theme, again Greece, again that's probably shipping. South Africa we saw was gold related, etc. So and then month again some South American, Brazil. Some people were mentioning Petrobras, which is an oil company. Again, South American. So that's into Chile. I think there's lithium, and there's been some positive commentary on the Chilean market as a potential emerging market. So that's interesting. So we hope that helps as well. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released, typically I go to investing.com and I will copy out the results of that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, if we look at the economic data that we got last week, on Tuesday we got some CPI data that showed that although inflation is still hot, it was expected. And it was generally a little lower than forecast, and so the markets took that as a positive. But then on Wednesday we got producer price index that showed that that's also still hot, and it's worse than forecast. So that, in my humble opinion, that means there are further waves. This is the producer's inflation, and that tells us that these waves of inflation from the producers' manufacturers have not yet hit the consumer. So in my humble opinion, that implies that we have further waves of inflation that are going to hit the consumer, and that's going to drive CPI up, hit the consumer's pocketbook, and we'll talk about what the impacts of those going forward may be in our strategy section at the end. But again, this indicates, there are further waves of inflation to come. Inflation is being resurrected, and that implies that the Fed may have to hike rates more aggressively than previously anticipated, and the market took that as a negative, and the market declined. There's even talk of a 0.75 interest rate hike, although I don't see that anytime in the near future. Again, this hot inflation, and a lot of people now are really calling for the Fed to act aggressively to what they call kill inflation now, kill inflation now. So again, inflation's been resurrected with the high energy prices, keep surging. That hits transportation, which hits almost everything, as well as packaging, etc. Then on Thursday, Thursday was the options expiration, so we always see more volatility in the options expiration dates. And again, you can see a whole calendar of when the OPEX dates are on our BeachBum Trading Google Calendar, so we'll leave the reference to that included below so you know when the options expiration dates are. And then we saw jobless claims data, and the continuing claims was a little bit better than expected, but the initial claims was worse than expected, so more people started claiming unemployment than was expected, so that's a negative for the economy. In the past, the initial was a little lower, so again, we're seeing waves of jobless claims, and that's a negative. Then we saw retail sales was mixed, and it was pointed out that if you take out the gas sales, retail sales was actually down. So the increase in retail sales was actually due to the increase in gas prices. So that was a little bit misleading and kind of a negative. And then we saw, and this is a little ironic too, is after all of this hot inflation, higher gas prices, etc., the consumer sentiment data came out better than expected. So despite all that, the survey says that the consumer is feeling better about the economy. I'm not sure, and again, this has not been a great indicator of actual market conditions or economic conditions, so take that with a grain of salt. But that's what it did come out. It came out a little bit better than forecast. And then today the markets are closed, and then let's look at the economic data we expect for next week. Okay, if we quickly look at what kind of economic data we're expecting for next week so we can prepare accordingly, we can see on Tuesday we're going to get housing data, and then on Wednesday we get mortgage data. And we'll talk about a theme and a strategy, and again, to help resurrect your portfolio, We're going to talk about a theme in the housing market that we're looking to pursue when we get to the strategy section. So stick around. We'll talk about what the implications of these and why we're going to be watching housing and mortgage data on Tuesday and Wednesday. Then on Wednesday we get oil and gas inventories and production. Obviously that will impact or should impact the oil and gas prices. On Thursday we get our typical jobless claims data, so that'll tell us how the economy's doing again. And then on Friday we get manufacturing and services PMI, so more inflationary data. It'll tell us from the manufacturing and services sector how inflation is looking, and again we expect it to be hot. We'll see if it's hotter than expected or less than expected. And we typically get the oil rig counts. Now, one of the things that I think is kind of interesting is we've seen the oil rig count slowly just creeping up, quietly creeping up, but it has not had a significant impact on the prices of oil and natural gas, which seem to just keep running up due to the Russia thing. So even when there's news, there was some news out about Egypt, I believe, was offering to produce more natural gas, and the natural gas price is still running up. So it seems like that's just the trend, and it keeps running up, even though production, and we had the releases from the Strategic Petroleum Reserve, and the price keep going up. So that's kind of an interesting dynamic going on right there. Is the data doesn't seem to matter, the prices are going up. So we'll talk about how can we play that going forward as well. Also, we have started earnings this week. The banks reported they were kind of mixed. The housing, because of mortgages, jumped up. Anyone that was exposed heavily to mortgages, Wells Fargo took a hit. So again, earnings matter, and we'll put a link to our previous video that talks about how to play earnings, various strategies, etc. I'll put this link to this video that goes into detail, in more detail in that area in the description box below. So we hope that all helps. Okay, if we look at the Markets tab in Webull, and again, we have a separate video that goes into more detail about how we use the Markets tab in Webull to do this type of market analysis. So I'll leave a link to that in the description box below so you can get more information about how we use this Markets tab in Webull for our market analysis. But if we look at how the markets ended Thursday, April 14th, we see more decliners than advancers, although we can see generally the decline was relatively small with a longer tail, and the advancers, the tail is a little bit longer. If we look at the net inflow, as we've seen for some time, the NASDAQ has had a significant outflow, but now we also see the New York Stock Exchange had an outflow. So again, indications of the declining bearish market that we've been stating that we're in is indicated in there. So if we look at, I'm going to look at the industries. Okay, so for Thursday, the close of the market, if we look at the industries again, we see energy, coal, natural gas, positive, again, oil, okay, and computers, again, that's going to be semiconductors related, is negative, educational service providers, negative, and education looks like it took a hit, and that may be due to, well, they suspended payment requirements on student loans again, so that was a little interesting. Pharmaceuticals was kind of negative. Aerospace defense was mixed, which is a little interesting given the war in Ukraine. So if we look at ETFs, see the direction: Dow down, S&P down, NASDAQ down, VIX up, Russell down. Again, industrial, pretty much everything's going to show down except for energy. We see consumer cyclicals was down, basic materials were down on Thursday but up for the week. So again, consumer defensive was up. Financial service was down. Again, the banks reporting that was mixed. Got commodities, metals, livestock, natural gas positive. Again, energy and basic materials, total return. This, here's one that's an inflation-related ETF, bond ETF. So obviously this was quite positive, expecting higher inflation. So China was up on Thursday. We'll talk about how we've been playing China, but the yuan was down, so that's a little interesting. So now let's look at the futures. Right now, as of the filming of this video, Webull is offering 5 free stocks when you open and fund an account. Typically they offer 2 or more free stocks, but sometimes they have special promotions, so please check our link to Webull in the description box below. You can also find on the About page or the header of our YouTube channel, BeachBum Trading YouTube channel, and or in the link section at the bottom of the About page, and or in the link section under trading platforms on our home page, beachbumtrading.com, bum without the U. And again, if you use our affiliate link to Webull, you can currently get 5 free stocks when you open and fund an account, and you can see those stocks can be up to $3,000 upon funding your account. So we hope that all helps. Okay, if we look at the futures tab in FinViz, we can see all the indices again failed to break out with any significance, and then downtrending again. So again, we expect further downtrend. VIX has stabilized. It's been pretty flat. We've had little bumps up and down based on data. We see oil had been declining a little bit and then started running back up. It had declined just below 100, now it's sitting a little above 100, and then we see this crazy run up in natural gas. So again, the most recent top in natural gas was about 750. We'll talk in more detail about how we want to potentially play a spike. We're kind of waiting for that wick. Total spike around, it may be 750, maybe higher than 750, but we're waiting for that final spike, showing a peak in natural gas, and then we're going to double down on our short in natural gas using cold. Again, if you're playing this momentum in natural gas, you can play it with oil. There's also UNG, which is a direct correlation with the price of natural gas. So again, if you're playing this short term, obviously there's strong momentum. At some point it's going to peak, and then we expect a rollover for seasonality reasons, supply demand. Again, commodities tend to cycle, and again we'll see something similar in oil as well at some point. Gold did start to run up a little bit more. Again, flight to safety, store of value, high inflation, etc. are all tailwinds for gold and silver. Silver was outperforming gold for a good part of this week. So those are both positive. And then all your agricultural products due to the war, etc., are all running very high. This crazy run up in orange juice, I finally found out what the reason was. Apparently there's some kind of disease that has impacted the supply of oranges, I believe here in Florida, and that's why this run up, this crazy run up in orange juice. It's very interesting looking at the futures because you can often see that there's a problem without until before you know what the problem is. It's like I could see there was something going on with orange juice, I just didn't know what it was. Unfortunately, I don't have any direct way or a way with an ETF and a retirement account to short orange juice. So if you want to play individual stocks to short that, that may be an opportunity. We also saw this previous gap up in lean hogs, and that was an opportunity. But again, I don't have a good way to short that. So again, the futures often shows you where there's a problem before you hear the news as to what is causing that problem. Again, bonds really declined finally and then had a slight bump. Again, this is the risk-off bump. When the market kind of panic, then they go buy bonds, even though we know that bonds are going to be sold off by the Fed, and should therefore the prices should be declining. Yields should go up, and that corrected heavily on Thursday. So, and then we see this correlation again between the U.S. dollar and Japanese yen is interesting. So we hope that all helps. Now let's talk about, some themes we see, some strategies we might use, again, to help resurrect your portfolio, even in this declining market, and how we can make money. Okay, let's talk about some of the trends we see, themes, and some strategies, how you can resurrect your portfolio and orient it to the current high inflation, declining bearish markets environment that we find ourselves in, and again, make money in any market. So the first factor I wanted to point out is, we had all this high inflation data, and one of the days that they pointed this out, CNBC came out and said, okay, with increasing rates, you should buy I-bonds. And that was an interesting thing. They, recommended that right on CNBC, and then several articles came out that you should, silver lining in surging inflation is buy I-bonds because their yield could be over 9%. So again, if you're in a fixed income, you're looking for, a dividend, a yearly yield type of income, then the recommendation was to buy I-bonds. Now at the time, I was not familiar with I-bonds. That's not something that I've done. So I started asking around the various discords and various chats, and one of the great things about the trading community is people tend to help each other out, and everyone has different knowledge, different experience, different expertise. So I started asking around, how do you buy I-bonds? And thank you to Stork, who is a member of the Chartist Discord that I also participate in. I participate in a number of discords, and again, I posted this question around, and he was the first one to answer. Also, Chelly in the Benzinga Discord responded as well and said, okay, you buy I-bonds in Treasury Direct. And so here's the link, and I'll include this link in the description box below, that if you're interested in buying I-bonds, again, they're predicted to yield up to 9% a year, which would even beat the current inflation, which is as high as 7-8%. So that beats, typical dividends, etc., typical yields, although there are some high-yielding individual stocks that we could talk about as another way to beat inflation, and we've talked about some in the previous videos where we talked about how to deal with hot inflation. So again, we hope this helps. Again, another way that you can resurrect your portfolio, reorient your portfolio in this hot inflation environment is, if you're interested, you can buy I-bonds. And again, we'll leave the links to all this. You can read this in more detail in the description box below. Also, another trend that I want to stress is that this hot inflation, there's now surveys coming out on the various financial shows, etc., where they're surveying consumers and saying how are they actually dealing with inflation. And people are actually, they're saying, I'm actually starting to eat out less. Well, that's going to impact restaurants, right? And higher end, any food items, higher end, they're cutting back because groceries, etc., are expensive. They said, well, we're going to do less entertainment. Well, obviously, theaters, concerts, etc. People are just outright stating, we're going to spend less money in those areas, less travel. Well, ironically, some of the reopening, the hotel and lodging and airlines and cruises ran up one day. Well, that's contrary to this theme. So my point being, be careful in those areas. That's a short-term pop. Probably the reopening from the last quarter before inflation really took hold. And going forward, we're going to see the consumers spending less in those areas, which means those companies are going to make less money, have less profit, etc. So that's going to be an ongoing thing because inflation is not transitory. It's going to be with us for a while. And something I didn't put in here yet, but I'll comment on, is also increasing interest rates is going to hit the consumer in their pocketbook due to credit cards. There's very high consumer credit debt, and as interest rates increase, the consumer's going to be spending more servicing their credit card debt, which again means less discretionary spending, and it's going to hit these discretionary areas first. They also said they're driving less due to gas prices, but that's, again, it's just taking money out of their pocket, less discretionary, so they're going to revert to necessities. So think about, what does the consumer have to buy? Well, food, low-end food. We talked about the dollar stores and the big box stores and our adding of Big Lots into our bullpen. And again, that's going to be a theme as well. Your average consumer is going to go down the chain of retail and go to the more discount retailers. So again, that's an ongoing theme we'll be looking at, and staying away from your higher end retailers that consumers are not likely to spend their money in. Another theme that we alluded to earlier is that, in my humble opinion, housing is going to eventually roll over. And the factors that I believe is, the prices ran up really high, and now we've got rapidly increasing mortgage rates. So again, the prices are high, your average consumer, the mortgage rates are high, you're going to see fewer buyers. And at the same time, I believe that the builders, when they saw the high previous demand, started building like crazy to take advantage. There are issues with supply chain, etc. cost. I think they're going to oversupply, and we're going to go from again, it's a commodity. Housing is a commodity too, and I think we're going to go from a state of where we had a shortage, and then the suppliers start oversupplying, and now we're going to have a glut of housing and no buyers. So we're going to shift from a seller's market to a buyer's market, and the home builders, etc., are going to make less money. Therefore, we're planning to short the housing industry using an ETF called DRV. We'll talk about this in more detail in part 2. But again, because of this theme, we think eventually housing is going to roll over, and we're going to short housing using DRV very, very soon. So the home builders may do okay this quarter because, again, that's backward looking. And this theme, I think, is a forward-looking theme. So we're going to, skate where the puck is going and short housing using DRV. So we hope you'll come back for part 2 of our weekly trading game plan, where we will pick more of our individual stocks to put on our watch list for next week, the week of April 18th through April 22nd. Please let us know what you think of all this information in the comments below, in our Discord, in our Facebook group, etc. And again, let's have a discourse on all this information. So, and let us know what else you have any questions about. Again, one of the great things about the trading community is we help each other out and help each other make money. And again, we hope this will help resurrect your portfolio so you can make money in this high inflation, bearish, downtrending market. So please let us know, and we'll talk again later. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.